Welcome to the Explainer. Today, we're diving into the fine print of your home insurance policy. You know, those hidden sentences that can end up costing you tens of thousands of dollars right out of your own pocket. By the time we're done here, you'll know exactly what to look for and, more importantly, how to fix it.
So let's just start with a number. $22,000. Now, this isn't just some random figure on a screen. This was a real-life financial nightmare for a homeowner, a bill they were absolutely positive their insurance would cover, but it didn't.
Imagine hearing this. This was the sentence, the devastating gut punch of a sentence an insurance adjuster told a family after their basement flooded with 8 inches of raw sewage. I mean, they'd done everything right. They paid their premiums on time, every time. And then one storm changed everything.
And that one little sentence, buried somewhere deep in the pages of their policy, had a massive, massive consequence. They had to drain their own retirement savings to pay for that $22,000 in damage. And that, right there, is the hard truth about insurance exclusions.
So you have to ask, why do these gaps even exist? I mean, it feels totally unfair, right? But it really comes down to a fundamental misunderstanding of what insurance is actually for in the first place.
See, the whole point of insurance isn't to be some kind of home warranty that fixes anything that goes wrong. No, it's designed to protect you from things that are sudden, unexpected, and accidental. It's not there for things that are pretty much inevitable, like normal wear and tear, or, problems that pop up because you've neglected basic maintenance.
And here's how that plays out in the real world. Your policy will almost certainly cover a pipe that just suddenly bursts inside a wall. That's a classic example. But it's not going to cover the damage from a slow leak under the sink that you knew about for months and just kind of ignored. That's a maintenance issue, not an accident. The magic words you always need to remember are sudden and accidental.
And then you've got the really big ones. Some major events, like floods from rising rivers or huge storm surges. And of course, earthquakes. Those are almost always excluded from a standard policy. They're just considered so catastrophic that they require their own separate, specialized insurance.
All right, now for the really juicy stuff. Let's get into the surprising gaps, the ones that catch most people completely off guard. These are the little details in the fine print that so often lead to those dreaded denied claims.
Okay, let's start with your most valuable possessions. Let's say you have a $10,000 engagement ring. It's in your house, so you'd assume your home insurance covers it if it gets stolen, right? I mean, that makes sense.
Well, you'd think so, but you're probably wrong. Most standard policies have this thing called a sublimit for high-value items like jewelry, and this can cap the total payout for all of your stolen jewelry at as little as $1,500. That leaves you on the hook for the other $8,500. Ouch.
And the gaps just keep on coming. That expensive work computer you use for your home business? Yeah, that probably has a really low coverage limit too. Your dog? Well, if you have certain breeds, any liability for bites might be completely excluded. And even things for fun, like backyard pools and trampolines, often have limited coverage because insurers see them as attractive nuisances, basically magnets for accidents. Now here's one most people have never ever heard of. It's called the ordinance or law exclusion. So get this, imagine your house is damaged, but since it was built, the local building codes have gotten way stricter. Well, your policy might only pay to rebuild it to the old standard. That leaves you paying out of pocket for any expensive upgrades that are now legally required. And here's another one that really surprises people. Let's say you go on a long trip, or your house is empty between renters for more than, say, 30 or 60 days. Your insurance company could actually suspend parts of your coverage. Why? Because an empty house is a riskier house, and they might not cover a loss that happens while no one's there. And this one might be the most important distinction of all. You have to know if your policy has actual cash value, or ACV, versus replacement cost. ACV pays you what your 5-year-old TV is worth today, which, let's be honest, isn't much. Replacement cost gives you the money to go out and buy a brand new, similar TV. The difference between those two can easily be thousands and thousands of dollars.
You know, sometimes a claim gets denied, and it's not because of some sneaky exclusion. It's because of something the homeowner either did or, well, failed to do. This is so crucial. Avoiding the denied claim isn't just about what's in your policy, it's also about your own actions. Things like waiting too long to file the claim, not having a home inventory to prove what you actually owned, or letting it slip that you knew about a leaky pipe for weeks. Any of that can completely torpedo an otherwise valid claim.
Okay, I know. That was a lot of bad news, and it's easy to feel a little overwhelmed. But don't. Let's get to the good news, because the solutions to plug these gaps are actually surprisingly simple and honestly pretty affordable.
So there are three main ways you can patch these dangerous holes. First, you can add endorsements or riders for specific things like sewer backup. Second, for the big stuff, you buy separate policies, like for floods or earthquakes. And third, for that $10,000 ring, you schedule it, which is just a fancy way of saying you list it individually on your policy for its full appraised value.
And you want to hear the best part? Remember that $22,000 sewer backup nightmare from the beginning? Well, adding an endorsement to cover that usually only costs somewhere between $30 and $75 a year. It is such a tiny investment to prevent a total financial catastrophe.
Okay, so this all leads to one very clear action item for you. Your homework, if you will. Don't wait for a disaster to happen. Sometime this week, just set aside 1 hour. Find your policy's declarations page, that's the summary at the front, and go straight to the exclusions section. Just read it, see what it says.
You know, maybe the best way to think about all this is to see your insurance policy less like an unbreakable fortress and more like a protective umbrella.
That umbrella is fantastic for a sudden downpour, like a burst pipe. But it's going to be completely useless if you're standing in a rising river. That's a flood. And it's just as useless if it's full of holes. And those holes? Well, those are your exclusions.
Honestly, a few bucks and maybe 1 hour of your time is all it really takes to patch those holes and stop a financial nightmare before it ever starts. So the real question I want to leave you with is this. Is your umbrella full of holes? Because the only time to find out is now, before the storm rolls in.